Hello and welcome to European Market Recap. All focus for both the European and US asset classes today to be on the US jobs report, scheduled to be released at 1:30 p.m. London time, that's 7:30 in Chicago. For the change in non-farm payrolls figure, today the median estimate stands for a reading of 140,000, so it's quite a lot higher than March's reading of 88,000, which marked the biggest miss on expectations since 2009 and the lowest reading itself since June of last year. So the poor weather across the month of March really dampened hiring across the 30-day period. However, that will not be an excuse this time around as the weather conditions were more favourable. However, the ADP employment change figure earlier this week did miss expectations, but analysts have warned that could be for more technical reasons as opposed to economic fundamentals. So not necessarily indicating a lower than expected reading for today's non-farm payrolls. In terms of the unemployment rate, last month it actually fell to 7.6%. It is expected unchanged today, but all eyes will be on the participation rate itself, as it did fall last month, not for positive economic reasons, but purely because further workers were leaving the US labour force. But as always, the market reaction to today's non-farm payrolls report likely to be very mixed, as a lower than expected reading does signal economic weakness. However, it does indicate that the FOMC will be forced to continue their QE programme, and as indicated by the FOMC rate decision, even at an increased pace of bond purchases. So a lower than expected reading potentially prompting some positive moves in US equities, possibly bringing the S&P 500 within range of 1600 for the first time in history. So of course we will bring you that release as soon as it hits the wires, as well as any other relevant commentary to your trading. But in the meantime, that's all from me. Make sure you have a great rest of the day.